Welcome back, traders. Happy to have you here today. In this short video, I will show you how to build an effective trading strategy with the Open Interest Chart Indicator to detect trade opportunities in the market. The Open Interest Chart displays commitments of traders' percentage change of futures open interest with the unique circular plotting technique, inspired from this publication, Periodic Ellipses. Open interest represents the total number of contracts entered by market participants, but has yet to be offset or delivered. This can be a direct indicator of market activity or liquidity, with higher open interest indicating a more active market. To apply this indicator on the trading chart, search the keyword Open Interest Chart and select the Open Interest Chart EP by Lux Algo on the TradingView Indicator Community folder. As we can see, here is the trading indicator. Before I proceed to educate you about how this trading indicator works, I need to highlight indicators and their purpose so you can have a quick understanding of how the indicator works. To do this, we need to right-click on the indicator. Here are the parameter settings of the indicator. It's advisable to leave the default settings. Under the settings, there are boxes to check. If these toggles are enabled, they will use the first column with a pre-filled list of futures open interest tickers symbols. And if they are disabled, they will use the empty field, where you can enter your own ticker symbol. As we can see, there are pre-filled lists. The first column is filled with a list so you can choose your open interest easily. Otherwise, you would see CO2:088691_F_OI, aka gold futures. Open interest, for example, if applicable, you will see three different COT data. COT, Legacy Commitments of Traders Report Data. COT2, Disaggregated Commitments of Traders Report Data. COT3, Traders in Financial Futures Report Data. Empty field. When needed, you can pick another ticker symbol in the empty field at the right and disable the toggle. Here are the time frames. Commitments of Traders (COT) data is tallied by the Commodity Futures Trading Commission (CFTC) and is published weekly. Therefore, data won't change every day. The default set TF is daily. Under the Style section, there is the middle. Based on the enabled default, drawing start from the middle circle towards outer circle is +% change. Towards the middle of the circle is -% change. If disabled, drawing start from the middle point of the circle towards the outer circle is plus or minus. And in both options, +% change will be colored green. -% change will be colored red. In 0% change will be colored blue, and when no data is available, this will be colored gray. Size circles. Options: tiny, small, normal, large, huge. Angle. Only applicable if from middle is disabled. This sets the angle of the spike. Show ticker. The name of the ticker, as seen in the table, will be added to labels. Text fill. This sets color for plus or -% change. Table. This sets two text colors, sizes, and position. Circles. This sets the color of circles. Style can be changed in the Style section. Traders can modify the indicator to suit their desire. The working concept of this trading indicator is based on market activity or liquidity. Increasing open interest is highlighted in green on the circular plot, indicating money coming into the market, while decreasing open interest, highlighted in red, indicates money coming out of the market. You can set up to 6 different futures open interest tickers for a quick follow-up. As you can see, this indicator is suitable to track market liquidity in the cryptocurrency, Forex, commodity, stocks, and index markets. We can use this indicator to track USD currency pairs in the Forex market based on the liquidity value on the US dollar index. What is the US dollar index? The US dollar index is a measure of the value of the US dollar relative to a basket of foreign currencies. As a Forex trader using this indicator, you should focus on the US dollar index liquidity information presented by this indicator. Cryptocurrency traders should focus on the Bitcoin CME-F. The Chicago Mercantile Exchange is a key part of America's financial infrastructure. It is originally a marketplace for settling agricultural futures. It is now a major trading hub for precious metals, foreign currencies, treasury bonds, cryptocurrencies, and many kinds of derivatives, CME Group. Metals products and gold traders need to focus on the gold-COMEX. OMEX is a designated contract market, DCM, for the CME Group, offering benchmark metals products subject to COMEX rules and regulations. Energy and oil traders need to focus on the NYMEX. NYMEX is a designated contract market, DCM, bringing energy, gas, and metals products to the CME Group. Stocks and index traders need to focus on the CME. Likewise, the E-mini traders need to focus on CME. Now let me show you how to use the open interest chart to buy and sell in the market. First, you have to decide the sector you want to trade in. For example, let's trade the Forex market. For a better result, make sure to trade on the USD currency pairs. Let's choose the USD Canadian dollars. As we can see, the US dollar index gave minus 14.8 in the red color. This decreasing open interest highlighted in red indicates money coming out of the market. This means traders should be focusing on watching out for sell setups in the US dollar market. As you can see in the Bitcoin data value presented here, the value is almost 20 in green color. Since Bitcoin is the leader in the cryptocurrency market, it's used to track the price performances of the crypto industry. Cryptocurrency investors should be looking out for buy setups in the crypto market with this information. And currently, the indicator is showing us that there is more money coming into the market. Therefore, as a trader, it's essential to blend this technical indicator with other price actions in the market. Indicator traders can also blend the open interest chart indicator with other indicators, such as trend-following indicators like moving averages or exponential moving averages. The best way to make an entry with the open interest chart indicator is to patiently wait for a volume spike in the market, and then wait for a potential pullback for a better entry to reduce risk exposure. Setting a stop loss is preferable at the point of the invalidation of the strong volume spike candlestick, which can also be referred to as the liquidity bar.